Amid the ride-sharing boom, the demand for bike and scooter sharing has gone into overdrive, and one company cashing in on the trend is San Francisco-based Lime. Lime is the eco-friendly transportation rental company founded in 2017, now in over 100 cities across the globe. Lime offers an app-based rental service for electric bicycles, scooters, and now cars. For more on the company and the future of ride-sharing economy, let's bring in Brad Bao, co-founder and executive chairman of Lime. He joins us from the Credit Suisse Private Innovative Company Summit in Las Vegas. Brad, great to have you on. Thank you for your time.
Thank you for having me here. Hey, everyone.
I have not had the pleasure of encountering a Lime scooter or a bike, but as I understand it, Brad, what makes you different from the city bike, which we may know here in Manhattan, is that you can rent this bike and leave it anywhere you want. Do you make money per ride doing this?
Yeah, for those who does not know Lime and the service yet, that we are called a dockless, bike share and scooter share that user has the flexibility to pick up anywhere and drop anywhere that's legally. And by using the GPS technology and other tracking devices, we are able to do it and very efficiently. So not only we give the user faster and more affordable ride, but also that we give the flexibility from them truly from A to B. And yes, we as a company, the global leader in the micro mobility business, that we're happy to report we have dozens of markets already, are profitable.
Do you make money overall, Brad? I mean, how much, for one, do you charge a consumer to rent one of these bikes or scooters? Do you make money per ride? And I would imagine that the cost of caring for a scooter that could be left anywhere would be higher than if you had to return it to a docking station.
Yeah, I think first of all that on average that our rides cost roughly about $3.5 that across the globe there in terms of the 100 markets we're operating. So it's significantly cheaper than a car share business in terms of the same trip, and sometimes even on par or cheaper than the public transit. That's the value we provided to the users. Meanwhile, that per trip basis, yes, that is a very very profitable potentially business, given that we keep 100% of the revenue. This is one of the significant difference compare us versus the ride share business. And in terms of wear and tear, that it's not necessary to be worse than the dock-based bike share business, right? That the device is still the device. It's just that we added the flexibility to the service that provide benefit to the users.
So even if you included the cost of damage and upkeep and all that, you're still largely profitable?
Not as a company yet. We're still growing really fast. And most of the markets that were relatively new in the market, it takes a little bit of time to mature. And for the markets we are operating in, that we already have 14-15% of the markets are profitable.
How do you think about total addressable market? I'm curious if you think that there's overlap, for instance, with Lyft and Uber and taxis, in addition to the direct competitors like a city bike.
The way we look at it, the short trips that all the data shows in the city, which I think you yourself included, everyone that live in the city, anywhere globally, that we always face the short distance travel challenge, right? There's no good alternative today for the trip that's too long to walk and too short to drive. So the number shows that in the U.S. alone, on a daily basis, that short trip less than 2 miles in the city environment is about 300 million trips per day. And we, as of the rest of the world, we're talking about 1 billion trip on a daily basis. And that, apparently there's some overlap with shorter trips on the Uber and the Lyft rides. That our overlap is roughly about 30%, 30 to 40%, depends on the city, that our users are replacing car trips, ride shares, personal car trips with Lime services. So I think there are some overlap, but largely is a new category that if we think about it, every day that in New York or Chicago, Paris, London, wherever you are, that there's no other choices. So we're creating a new segment of the micro mobility. And on top of that, I think compared to the bike share in the past is entirely different. That business model is different and the addressable market is different. And our broader user base that range from the age group as well as genders and all that is much broader.
Okay. Brad, fascinating discussion. Thank you. Brad Bao, co-founder and executive chairman of Lime. Tim, you've actually been on a Lime.
I have Lime.
mobility
I have
device.
Lime, and I've gone from being a skeptic on the City Bike to a major advocate and user. And the irony is that of City Bikes, yeah, that we don't Lime yet, at least in the part of the city I live in. But the irony is, of course, that the rideshare world has created such urban traffic that it's created the opportunity for the scooters and the bikes. I mean, there's no question that Uber and Lyft have created a congestion issue in a lot of major urban centers that's made it so people want to get on a bike and a scooter. I think it's fascinating.
You could leave this one anywhere. This is not like when you go on the city bike.
You got to dock it.
You have to dock it.
I could ride it 10 and leave it in front of the taco stand down there.
But Mel could get a taco and I could steal her scooter while she wasn't even looking.
Well, if I just leave it there, then you will have to rent that scooter again.
But it just seems like the cities will not allow that. There's got to be some sort of
scooter littering.
Yeah, exactly. There's going to be a problem with that. So, what I don't understand is how they account for injuries. There's got to be like an overwhelming
Probably sign away your
risk.
life.
I'm not wearing a helmet, I can tell you that.
Exactly. PSA, wear your helmet.